Okay, I'm going to give everybody else a few minutes to join, but I don't want to hold too long because we have a lot to cover. While we're waiting, we could talk about, yay, who is that?
It's Cipriano Alfaro.
Thank you. Good sound. How do the two of you feel about taking an accounting class?
No, good. Worthwhile and well made.
I'm kind of nervous. I've never really done this before, so it's new to me.
Okay. That's okay, because we start at the beginning. It's okay to be nervous. Actually, I'm kind of nervous because I'm using WebEx. And I'm not used to being nervous because I've been teaching for more than 20 years. So I am going to pull up our course. That's interesting. It made it all. There we go. Okay, can you see our home screen for our course?
Yes.
Okay, perfect. Because I don't have my chat function. I don't know if I can turn my chat function on from here. So active speak. Nope, I can't. Okay. So what I'd like to do is introduce myself and then go through the learning platform a little bit, especially if you're new to it, and then look at what you need to be working on this week, and then work some examples with you so that the material isn't entirely new when you start it. So for starters, my name is McBride. I'm obviously your instructor for this class. I have an accounting degree from University of Houston. I have an MBA from University of Phoenix and a doctorate in advanced accounting from North Central University. I promise a doctorate in accounting sounds a lot worse than it is. And I actually got to write my dissertation on something much more academic. So I have worked in public accounting doing tax. I've worked in public accounting doing audit. I've worked for a music distribution company. I worked for a medical management, practice management company. I was the CFO for a publicly traded company, which sounds like a lot more fun than it is. It turns out that it really eats up your whole life. When I married my husband, he had a company, and so I quit my job and I took the company over with him. We grew it. It was a manufacturing company. We manufactured cushions and sold them to wholesale, retail, and commercial customers. We shipped internationally to 5-star resorts. The company grew. I was so focused on growing it that the company grew too much. And one day I realized that my children were sleeping on this, my daughter was sleeping on the sofa in my office when she had strep throat on more than one occasion. And I looked at my life and I decided that something was wrong. So we moved to Colorado and I started teaching full-time, and I've been doing it ever since then. I now live in Michigan. On a personal note, I have 2 children, a son who just turned 16 and a daughter who is 14. She turned 15 in December. So my son started driving a little bit later. My daughter's going through driver's ed now, so that's kind of where my life is. Both of them go to school online, which is a little bit unusual. My daughter is a competitive figure skater, and my husband teaches science in high school. So the good thing about having me for this course is that I don't have a day job. I teach online, that's all I do. So you are perfectly able to call me during the day. I'm also happy to talk to you during the evenings and on the weekends. I do lecture on Tuesday and Thursdays for another school from like 9 to 11, but I'm available before that. And so there's no reason to worry you're not successful in the course, because you can always reach out to me and we can jump right on here and look at what you're doing together and figure out the answers to your questions. My cell phone is in my instructor information. I also put it in a lot of the introduction posts. I put it in a lot of my emails. It's there because it is okay with me if you call me. On the weekend too, I'm well aware that, you know, when you sit down to do your work, you know, you have jobs and kids and busy lives, and when you block out the time to sit down and do your work, as much as possible, I would like to be there to help you when you're struggling with the concepts, because when you go back later and try to figure out what it was you didn't understand, it's a lot harder to communicate it. I do respond to email, and you can also text me anytime, but you will find that a lot of the questions I'll say, would you please call me? And it's because I know what to tell you when I know what you're thinking, and I don't know what you're thinking without talking to you. So once I hear what you're thinking, then I know, oh, I see where you're off. Let me take it from there. So please don't be afraid of the telephone. As you can see, I'm a real person, and my whole family understands that accounting is hard. Okay, so are either of you, I know it's a 200-level course, so I'm going to assume you're relatively new. For either of you, is this your first course for Rasmussen or your first Blackboard course? You can talk. Don't be afraid to talk. Hello? Did I lose you guys?
What was the question? I'm sorry, I walked away.
Okay. Are you either new to Blackboard or new to the college?
No, I've taken classes previously and I've used Blackboard before.
Okay. Okay. So then I'm not going to go through the way the whole course is set up, because I'm going to assume and actually tell me if I'm wrong, because it could be an incorrect assumption. I'm going to assume that most of the courses are set up in a similar fashion. Is that true?
Yes, it is.
Okay, because I haven't seen any other ones. So, okay, so I'm going to assume they're set up in a similar fashion. So in that case, what I wanted to do was, you already know how to get to your textbook. You already know where the syllabus is. So you kind of have an outline of, what is it, Nakia? Nakia, can you talk, or are you chatting? Do you have a, okay. Okay, so first try, are you on your computer? Okay, so you should have a built-in mic. So go down to where the little mic is on your screen and click on it so that it's not muted. And see if you can talk with sound. Obviously, you can talk. Well, it is recording, because I'm recording the lesson so that I can post it. Oh, here we go. Participants, Radia. You're not muted. You should be able to talk. Okay, let me see how I can pull up the chat. There's the chat. Here we go. Okay, now I'm good. What is your question? You can go ahead and type it. And I'm sorry, it's Nakia. I see that. Oh, okay. So let's see if I can make it where you can talk. I haven't muted you. You should have. You should just be able to talk. We will work on, okay, so if you go up to audio, can you test your audio? Does it give you an option to test your settings? It also has like audio view, audio connection options. Make sure that you have the the microphone on your computer, like mine says Realtek High Definition, which is off my computer. And Cipriano, do you have any advice?
I'm not sure what could be wrong. Mine is just you either muted or you unmuted. It connected when you first enter WebEx. I mean, it asked you if you want to use the microphone.
Oh, when you first entered, did you say that you want to use your computer mic? Okay, we're going to have to try. All right, we'll get this figured out, Nakia. I knew it too, but we'll get it figured out. So let's look at the course. So we start at the very beginning. And so when you go into Module 1, which is where we are now, and I've already updated the calendar for everything, under lesson content is all the information. I'm going to add some PowerPoints that we're going to look at tonight so that you have them for reviewing, because we're going to look at what the assignment looks like and do a little bit of practice so that you're better prepared to kind of like dive in. Right, so all your assignments are listed, which is really great. The other place that you can look when you wonder, have I done everything that I was supposed to do for this week? Other place that you can look is the gradebook. The gradebook is always like a really good place to look when you're doing an online class and you want to make sure that you haven't missed anything, because you can see exactly there, what am I graded on? So you have a written assignment, which isn't a paper, it's working an accounting problem. We're going to look at that together and look at how to work it and also talk about the concepts that you need to do that. You have a discussion. Your first discussion response is due by Tuesday. Feel free to correct me if I'm wrong. And then your final response is due by the end of the weekend. So the more that you engage in the discussions, the more easily you'll learn the concepts, because the discussions let us talk to each other about why we do things the way we do and answer questions and, you know, talk about some of the things that aren't covered. Like I go over a lot of the vocabulary. I talk about, like this week I'll be talking about what the financial statements are and, you know, just a lot of good information about what you need to know to be successful. So you have the assignment, you have the discussion, and then you have a quiz. And there's a quiz every single week. The quiz is timed. So when you go into the quiz, and I'm sure this is like every class, but I'm going to say it anyway, when you go into the quiz, the timer starts. And even if you exit out and then go back in, the timer doesn't stop. So for the quiz, you need to set aside time to sit down and be able to focus on the quiz. And accounting isn't like other subjects. When you're working an accounting problem, you're thinking about a lot of things all at one time. And so it's really important that you have quiet time during that hour. You know, ask your significant other to take the kids out if you have kids. You know, find an uninterrupted hour to sit down and just be able to really think about the accounting. If we get into the week and we feel like it would be beneficial to have another session to review for the quiz, I'm thinking that Friday evenings I could meet for an hour to kind of go over the assignments, any questions that you have before you get into the weekend, and also to review for the quiz. Okay, so we have reading, which is really nice. It's really well done. This is the accounting equation that we're going to be working on. I'm going to present the material in an additional way, same material, but that way you'll have multiple things that you can go back and look at. So let's look at we talked about the deliverables. So you got your assignment, the discussions, and the quiz. So what I would like to do is I would like to look at the concepts that we're going to study. So I'm going to pull up a PowerPoint, which I will post for you, that I can share. Do you have any questions so far before we kind of talk about some of the content, because there's so much in accounting? Okay. Can you see PowerPoint? Unmute, type yes, something. I'm not used to sharing in WebEx. Please let me know if you can see it. Cipriano?
No, I can't see it.
You can, okay, good. I thought so, but I wasn't positive, and I didn't want to get halfway through it and go, should we see something? And I'm like, ah.
Sorry, I can't see it.
You cannot see it?
No, I can't.
Okay, so share my screen. Can you see it now?
Yes.
Okay, now I feel like a Verizon commercial, except for I'm seeing instead of hearing. All right, so what your assignment is this week, what you're learning this week is a lot of numerology. You are learning the accounting equation, and with that comes, like, a lot of students say they feel like they're learning a foreign language and using it all at one time, which really is kind of what's happening in week one. There's a ton of new terminology. And everything centers around what we call the accounting equation. And that's what your assignment focuses on. So what we're going to do is we're going to take different business transactions and we're going to apply them to the accounting equation. And then you have to build the financial statements, the balance sheet, an income statement, and a statement of equity. And I know that right now that seems really overwhelming, but it's going to be okay. So the first thing that we have to do is we have to talk about, like, what's an asset? What is a liability? What is equity? So an asset is something that the company owns that's going to provide a future benefit. So an example of an asset is cash, because the company has cash and it's going to provide a future benefit. Can you think of any other assets? Hi, Ann. If cash was an asset, another one is buildings. Can you think of any other accounts that might be considered an asset for business?
Equipment.
Yep. Equipment. Yep. So cash, equipment, inventory, accounts receivable. Accounts receivable is if we sell something or provide the service and they're going to pay us later, they owe us that money. That's an account receivable. That's an asset. I will post in the announcements for you tonight or tomorrow morning, probably tomorrow morning because I have a class after this, kind of a cheat sheet with a list of all different, like, common accounts that are assets, liabilities, and equity. So an asset is something that is going to provide a future benefit. A liability is what you already figure it is. A liability is something that the company owes. So an example of a liability might be a note payable. It also might be an account payable. If we, like, order something from a vendor and we're going to pay them later for it, that's an account payable. Whereas a note payable is like when you buy your car, you sign a legal agreement that says you're going to make X amount of payments over X amount of time, and it's going to be this much money, and here's the interest, and this is the end of the loan. That's a note. There's all kinds of liabilities like sales tax payable, interest payable. Basically, anytime you have an expense and you don't pay it right away, you also have a liability. Okay, are we good with assets and liabilities, sort of, for having just introduced it? Yes, no, maybe? Okay, perfect. Ann, are you with us? Are you good? And you're welcome to talk. All right, so equity is interesting. The idea behind equity is, theoretically, if we sold off all of our assets and paid off all of our liabilities, what we have left is equity. But that's not really how it works. And the reason that's not really how it works is because some assets like buildings and equipment are recorded at what's called historical cost, and we never change the amount. So if I bought a building for $500,000, I put it on my balance sheet as an asset for $500,000. 5 years from now, how much is that building going to be worth? Well, let me make it simple. Is the building going to be worth exactly $500,000? Come on, can't do this by myself. If I buy a building today for $500,000, it's not going to be worth exactly $500,000 5 years from now, right? But on my balance sheet, it's still going to be an asset valued at $500,000. So that's why the concept of equity doesn't really work the way you think it does. Now, under equity, there's 4 pieces. There's contributed capital, and then there's revenue and expenses from operations. So you can increase equity by selling stock or having somebody contribute money to the company if you're not a corporation. And on an operations side, revenues increase equity. So if you had a business and you made a sale, now you have more invested in the business that belongs to you. Expenses decrease equity, and dividends decrease equity. That's why all transactions can be applied 100% to this accounting equation every single time. Now, the other thing that you need to notice about the accounting equation is we have assets on one side, liabilities and equity on the other side. This equation will always balance. There's no exception to that. It will always balance. So the other thing that you have to notice is that for it to balance, every transaction has to have at least 2 pieces. It has to affect at least 2 accounts. Because if it only affected 1 account, then the equation wouldn't balance. So every transaction has at least 2 accounts. So here's an example of how the assets always equal the liabilities and equity. So if I knew, like at the top, if I knew that the assets were $150 and I had $30 in liabilities, then I know that my equity has to be $120. Are we good there? Okay. Now, if we got a little bit more in detail and we looked at Tesla under the expanded accounting equation, if I know that equity is $120, common stock increases it, so I've added 100. I have no dividends. Revenue increases it, so now I have 160. Expenses decrease it, so that's where I got my 120. Are we good there? All right. This is what you're going to have to do tonight, this week, with your homework. So I am actually going to do it this way, so that I can show you the thought process. Okay, so the thought process that you're going to go through, no, I don't know how to write on it. All right, I'll have to figure that out. So the thought process that you're going to go through is you're going to first ask yourself, what accounts, what happened? The first question is what happened? And that question is often shortchanged by students because you want to jump into what account was it? Or, you know, what increased or decreased? Or what's the entry? But the first thing you have to do is you have to understand what happened. And this is a little bit harder sometimes when you're using an accounting book because you're not living the transaction. And so when you're looking at it in your accounting book, part of what you have to do is learn, you know, how we say things in accounting books. So Chad Taylor invests $30,000 cash to start a company. So the first thing you're asking yourself is, what happened? All right, so what happened? An owner took $30,000 of his own personal cash and he invested it in a company to start a company. That's the first thing. So you have to get a picture of that. Then the next thing you ask yourself is, what accounts are affected? So what accounts do you think would be affected here as far as the company is concerned? Because one of them's easy. What did the company get? Hi, Ann.
Hi.
Nice to see you. What did the company get when you put that money in? So picture it. He took $30,000. He went and he opened a bank account for the company, put that money in the bank. So what's one thing that the company now has? Cash. Well, yes, they do have equity. And that's the other piece. They have cash. So one account is cash, and you're right. And the other side is equity. Because what has happened is he has stock. The company has sold stock. So we have cash that increased and common stock increased. So if we're looking at the accounting equation, right, our assets, cash, increased $30,000 and our equity increased $30,000. And this is what it looks like when you do your homework. There's going to be an Excel sheet that's set up for you like this, and you'll put the transactions under the topics exactly like this. So, do I balance? Does my accounting equation balance? Yes, because on the asset side, I have $30,000, and on the equity side, I have $30,000. Does this one make sense? One of the things that's often confusing to students is that common stock increased because you tend to think, well, but I sold them the stock, so I have less stock because I sold it to them. But what we're really doing, the reason common stock actually increases is because what we're really doing is we're saying, I've increased the equity in the company selling the stock. So I'm keeping track of how much stock equity I have in the company, and that's why it goes up. So then the company went and we purchased supplies and we paid $2,500 cash. So you picture this. Okay, I went down to Office Max with $2,500 cash and I bought paper and pencils and a heck of a lot of toner for $2,500, a lot of supplies. And one of the interesting things in the accounting world is that we treat supplies in our textbook bubble, we treat supplies as an asset. In the real world, we don't typically. In the real world, we typically treat supplies as an expense because the amount doesn't vary much from month to month. And so, you know, like this month we would buy toner, and next month we'd buy, you know, time cards and paper for the computer. So it really doesn't vary that much. But in our accounting bubble, we record supplies as an asset and then expense them as we use them, which we'll look at next week. So right now, we went down to the office supply store, we gave them $2,500 cash, and we walked away with $2,500 worth of supplies. So what two accounts are affected? Okay, equity and assets are a type of account. So what actual account names are affected? What did we spend to get the supplies, and what did we get for it? So we spent cash, right? And we brought back supplies. So that's the first thing you think, like what account is it? Okay, the account name is cash, the account name is supplies. Then you think, okay, what type of account is this? All right, so cash is an asset and supplies are an asset. And did it increase or decrease? Okay, well, I paid $2,500 cash, so cash decreased. I got $2,500 worth of supplies, so supplies increased. Now, I want you to notice something on the accounting equation. With the accounting equation now, we have one asset, cash, went down, and another asset, supplies, went up. So notice that you can have the accounting equation stay in balance even though we are only doing something on one side of the equation. So you don't have to have a transaction that affects both sides of the equation for it to balance. Are we good here? Okay, thank you, Cipriano. Anne, are you good? Nikki, are you good? Anne left the meeting, okay. And Nikia, yes, good. Okay. So let's say that we purchased equipment for $26,000 cash. What two accounts are affected? What did we spend? I'm going to have to figure out a better way to communicate. Cash. We spent cash, and that's one of the accounts. Perfect. What did we get for that cash? We spent cash. What did we get? Not supplies, equipment. We got equipment. So this might be like we bought a copy machine, we bought a manufacturing piece, we got equipment. The reason that's different is because equipment, you're going to learn later, is a long-term asset, and we treat it differently. So you figured out cash, and you figured out equipment. So then you ask yourself, what type of account is cash? Cash is an asset. What type of account is equipment? Equipment is an asset. Cash decreased because I spent it. I gave them $26,000. And equipment increased because I got to bring back the equipment that I bought, $26,000. So this is another example of how a transaction only affects one part of the accounting equation, but it still balances. All right, are we good here? Now, oops, how did I get that? Oh, that's right. I'm supposed to have a keyword. I'm like, why is the slide here? I forgot. I decided to get motivational since I had to do keywords anyway. So isn't this motivational? So our keyword is perseverance. I haven't figured out how I relate that to getting the grade for the live lesson, but I remember that I'm supposed to have a keyword for the students that didn't attend to give them credit for the live lesson. So our keyword is perseverance, which is something you're going to need in this class, not to mention in college in general. Okay, so when I say we purchase supplies on credit, this is one of those times where I'm talking about you have to understand how the accounting language works. So here I've got purchase supplies for $7,100 on credit. What on credit translates to is that's going to be an account payable. It means that it's like in the normal course of doing business, it's a regular vendor. On credit means accounts payable. So my two items that are affected is supplies. I brought supplies back, and I owe money. I owe on it. Accounts payable. Accounts payable is a liability because I'm going to have to pay it in the future. So now my two accounts are supplies and accounts payable. Then you ask yourself, what type of account are they? Okay, well, supplies is an asset and accounts payable is a liability, which you wouldn't automatically know this right now. The terminology is going to be all new. Supplies increased. I brought home $7,100 more on supplies, and accounts payable, my liability also increased. So now if I look at my accounting equation, I can see that my asset, supplies, increased, and my account payable, my liability, also increased. Do I balance? Yes, I balance. has to always balance. Okay, I want to show you an expense. So I'll do revenue first. Okay, so for consulting services, so what we did was we performed services for a customer. When we perform services for a customer, one of two things happens. Either they pay us right then, or they're going to pay us later. If they pay us later, that's an account receivable. If they pay us right then, what did we get? What's one of the accounts here? Cash. Yes, one of the accounts is cash. And then the other one is going to be consulting revenue, because the thing you have to watch for is in financial accounting, we use what's called accrual-based accounting. And in accrual-based accounting, we recognize revenue when it is earned, which means if we perform consulting services, but we didn't get paid now, they're going to pay us later, we still record revenue because we earned it. The question is, have we earned it? Have we performed the service? If we performed the service, then we have revenue, regardless of whether we got paid or not. The same thing is true for expenses. If we incur an expense, we have an expense, whether we've paid it or not. So if I buy fabric for my job, I'm going to record that fabric even though I'm not going to pay for it until next month. Because in financial accounting, we record revenue when it's earned, and we record expenses when they are paid. Sorry, revenue when it's earned and expenses when they are incurred, regardless of when you receive the cash or when you pay the cash. And when I say that here, it sounds simple, but it's one of those things that even at the end of the course, I'll be saying it and reminding you. You'll still be going, oh, that's right. So we'll work on that over the whole 5 weeks. Okay, so we provided consulting services and we were paid right away. So we have cash and revenue. And then we ask ourselves, did it increase or decrease? Well, cash increased because I have $4,200 more cash now. And revenues increased because I provided more revenue, so my revenue increased. Cash is an asset. Revenue is part of equity. And revenue increases equity. So when I look at my accounting equation, I have my cash that I brought in and my revenue that also increased. So do I balance? Yes. So let's look at an expense. We paid rent of $1,000 and salaries of $700 to employees. Now this is going to have 3 different transactions, 3 different accounts in it. So we paid rent, that's an expense. We have rent expense. We paid salaries. We have salary expense. What's our third account? What did I spend to pay rent and pay salaries? Cash. So I have cash, which decreased because I paid it out and it's an asset. I have rent expense and salary expense. Now, here's the interesting thing about this. This is where it gets key. So rent expense increased. I've incurred more rent expense than I did before, and salary expense increased. But when I'm looking at the accounting equation, I'm not looking at what it expensed it. I'm looking at what happened to equity. So when I look at the accounting equation, if I increase an expense, I decrease equity, because the more expenses you have in the business, the less you have left over for you. So an increase in an expense means a decrease in equity, and that's why it balances. Because when I look at the accounting equation, here I have my decrease in cash, 700, and my $1,000 and $700 in expenses. Oh, they didn't circle the 1,000. There's the 1,000 also. My $1,700 in expenses. Although my expense increased, the effect on equity was a decrease. That one gets tricky in the beginning. All right, does that make sense? Yes, no, maybe. All right, I want to look at I'm going to post these for you. I want to look at the financial statements. Okay. There are 4 financial statements. I think you'll have to prepare 3 of them. The income statement, and sometimes called the profit and loss statement. The income statement tells you how much revenue the company brought in and how much expenses they had. So the income statement is all of your revenue minus all of your expenses gives you your net income or net loss. Does that one make sense? The statement of retained earnings tells you how much you have left in the business. So you start out with nothing, no earnings the first year, and then you add revenue or net income. Net income increases retained earnings, and dividends decrease retained earnings. The reason dividends decrease retained earnings is because dividends is considered money that the company gives directly back from earnings to the shareholders. So by definition, dividends reduce retained earnings. So for retained earnings, we have our beginning balance plus net income minus dividends gives us our ending balance. The balance sheet is basically the accounting equation. It lists the assets, and then it lists liabilities and equity, and it gets a total for both of them, and they should obviously be the same. The statement of cash flows shows you where cash came in and went out for operating the business, for investments, and for other financing activities like selling stock or taking out a bank loan. The reason the statement of cash flows is important is because the income statement is based on accrual basis accounting. So it's possible to record income but have a lot of receivables, and so you've recorded the income, your income statement looks good, but you're not receiving any of the money. So you have cash flow issues. So no matter how good a company's net income looks, if they're not bringing in cash to operate the business, they're not going to survive. These three statements are related to each other. You have to prepare the income statement first. Now let's notice a couple of other things about the statements. Let's look at the title. So the first thing you have on the title of the statement is the company name. The second thing you have on the title of the statement is the title of the statement. The third thing that you have is the date. So I'd like to point out something about the date. Notice that the income statement says for the month ended. The income statement covers a period of time because it wouldn't make any sense to tell me how much income you got just today. So the income statement covers a period of time. The statement of retained earnings also covers a period of time. The balance sheet, however, look at the date. That is a specific date. The balance sheet is a picture in time. You don't really have to memorize that because you can think your way through it. Because with assets and liabilities, like cash, for instance, if I asked you, what's your cash balance for, December 1st through December 31st? You couldn't give me an answer. The balance sheet is the only statement that is a picture in time. So the date reflects that. We're looking at how much cash did we have on a specific date? How much accounts payable did we have on a specific date? Okay, so now let's look how they're related to each other. you have to do the income statement first. Now, if you forget that, it's okay, because when you're doing the statement of retained earnings, you won't have net income, and you'll go, oh, I have to go back and do the income statement. So you do the income statement first. So there's our revenue minus our expenses. Now, notice the format of the statement. We don't put dollar signs next to every number. And like when I list expenses like that, I don't put brackets around it or negative signs, because I'm already saying this is expenses. So I know I'm subtracting that. So instead, dollar signs kind of start and tell you where to start adding up and where to stop. So like I have the dollar sign next to 5,800. I took those two and they're set off to the left because that's where I'm going to do my subtotal. So I have 5,800 plus 300 gives me $6,100. And I have a dollar sign there because that's where I'm going to start adding up the second column. And then notice that I use a double underline at the end and have a dollar sign. And the double underline in accounting means I'm completely done. That's my complete total, I'm done. So the net income number goes on my statement of retained earnings. Most of the time on statements, you do not include anything with a zero balance. The statement of retained earnings on the first year is an exception to that, because a zero balance for the beginning of the year or the beginning of the period tells you that it's a new company. So I start with retained earnings, I add net income, I subtract dividends, and that gives me my ending retained earnings balance. I have to do that statement second because my retained earnings balance goes on my balance sheet. So on my balance sheet, I have assets listed on one side, and you can do them going straight down if you want to. I have assets listed on one side, and I get a total. I have liabilities, and then I get a total, and then equity, and I get a total. And I add my liabilities and my equity together, and they should equal the same as the assets. All right, so does this look like a model you can kind of use for your assignment? I am going to pull up the assignment quickly as well. So I've got this, share my screen. And I'm going to go down to Module 1. Can you see our course? Wait, was that yes or no? I missed it.
Yes.
Yes.
Okay, good. All right, so I've gone down to assignment, and this is the written assignment on the accounting equation. So notice this little Excel template here. Don't forget to click on that because you're going to need it. So I'm opening the Excel template, and you'll see that it looks, can you see the template?
Yes.
Okay, good. All right, so these are the transactions, and you'll see that see how they're similar to what we've already talked about in the example that I'm going to post for you. And then you're going to fill in the template. So like on May 1st, Smith received $10,000 as an inheritance. So that's his personal money, and used it to buy stock in the company. So Smith put $10,000 of his own money into the company and got stock. What two accounts are affected? What did the company get? What did he put in? Cash. So did cash increase or decrease for the company?
Increase.
It increased. So we're going to put $10,000. I've opened it in read-only mode somehow. I'm not sure how that happens. So I would put $10,000 here under cash. And then I would go over on the other side to common stock, and I would put $10,000 there. And then it does the math for you, which is really nice. So you're going to go through these transactions, and you're going to do this for each one. And every time you're done, you should be able to look at the balance and it will still equal. Then you're going to do the income statement. And you can see we've already put the account in here. You just have to fill the numbers in. And the numbers are going in the gray area. So there's the income statement. It's simple. The statement of retained earnings, simple. The balance sheet. Yeah, you don't have to do a cash flow statement. So do you see how this looks like what we just practiced? Okay. I wonder how I stopped sharing. That'd be a good question for how I stopped sharing. I'm not really sure how to stop sharing. I'm gonna have to go figure that out. Okay, so do you have any questions before you start? I will put the PowerPoint that I just used with the examples and all into the course announcements so you can look at it again. I will post the recording for this so you can look at it again. I will also look at the quiz and post a review. But if you find that you would like to get together on Friday night and look at the quiz or look at any questions you have when you get into the homework, because I know it seems easier when I'm talking about it, email me, text me, let me know, and we can meet at the same time on Friday if you would like to. Sound good? And, oh, there we go, stop sharing screen. Woohoo, look, I did it. I was telling a friend of mine, it's like, I'm really nervous about tonight, and I don't know why. I lecture all the time online. Why am I having this problem? They're all the same, similar, and it's, yeah. So anyway, I'm also going to post kind of a cheat sheet that has the accounting equation and a lot of account names under them because that all by itself is something that you have to really work out in the beginning. So follow the thought process. Realize that when you're recording one of these transactions, there's a lot more going on in your thought process before you ever put it down on paper. So it seems like it should just be something that can just jump onto the paper with no problem. And you're going to find that it doesn't feel that way at all. And the reason it doesn't is totally normal. It's because you're thinking through, you know, what happened, what accounts are affected, did they increase or decrease, what type are they? And every single one of those things that you're thinking about is brand new. So when you get into it and you find that it's harder than you felt like it was when we were going over it, just please know that that's totally normal. So you are welcome to call me if you have questions. You can email me. You can text me. We can meet again if you want to go over the quiz or the homework. You don't have to wait to meet with me. We can meet in between then and talk too. So just know when it's feeling frustrating that you're not alone in it. You have support. All right. Any questions before we go? Because I have a class right after ours.
What's on the quiz?
What was that?
On the quiz, is the quiz on the reading, or what is it based on?
Yeah, what you're going to read goes over what's on the quiz. So
Okay.
Your reading is going to be about the accounting equation, what type of accounts they are, some of the things we talked about tonight. Yeah, absolutely. Okay, Nakir, are you good right now? Cipriana, are you good? Anne, are you good?
I'm good, thank you.
Okay. Okay, you are welcome to call me, and I'm going to go because I've got to set up for another class. I will post the PowerPoints. I'll post a couple cheat sheets to help you. I really should call them resource sheets. They're not cheat sheets. and let me know how you feel about meeting on Friday, okay? And thank you for coming tonight and wading through my being new at this. Okay, I'm going to exit the class, but I will see you next week at the time or Friday if you choose. All right, good night, you guys.
Good night.